Okay, so hello guys, and welcome to today's video. And I'll be doing a brief overview of the PDF that I had written, and I hope you guys will be able to understand. And I'll have the link for the download of the PDF in the description, and it is in my bio on my Instagram as well. So I'd suggest you guys read it first before you actually come to this video, because it will really help you understand what I'm going to talk about in the video. So without further ado, I will continue now with what it is all about. Okay, so just a minute. Just a minute. This thing is causing a little bit of trouble, but okay. So this is the PDF. This is a PDF supply and demand made easy by Bossman FX. That's my Instagram. So this PDF is not a blueprint of how supply and demand. So basically, this is not how everyone is trading their supply and demand. People are trading their supply and demand differently, and this is just a way of how I'm trading it. And if it does not suit you, you can adjust it. But most of the knowledge here is just based on what I've observed and based on the books that I've read, and also what my mentor, that's Forex God, what he's taught me as well. So that's just how I trade, and my trading should not be able to dictate how you should be able to trade. Rather, it should just help you figure out how you're going to trade yours as well. So we'll go through like six major like topics. That is basic definitions, distinguishing between supply demand and support resistance, how to plot these zones, finding out the strength of the zones, how I trade the supply and demand, the limitations one can encounter while trading zones, how institutions place their trades. Okay, so first of all, I'll talk about what supply and demand is. So to me, okay, I'll basically say that supply and demand is the easiest that I can say is supply and demand are areas on the chart in the market where institutions place their trades. Okay, so like for supply zone, that's where institutions have their sell orders, and demand zones are places where demand zones are where institutions have the buy orders. Okay, so like if I'm to go to a chart, like now this is the GJ, so you'll see that institutions, every time institutions have their buys here, okay, so that they'll place, institutions don't place buys or like sells all at once. They'll place some, then once the market goes, they'll come back down, they'll push the market back down to complete all the other pending orders that were there. So now like here, and they don't place, and to notice that they don't place all their trades at one particular point. Like let's say they place all their trades on this 115 151 401. No, what they'll do is it's a given zone. Okay, so in this given zone, they'll come place their buy orders here, push the market up, take profit over here. Then you see, remember that they still have some other pending orders that have not been closed. Okay, so the market will come back down. Then once it gets here, the remaining pending orders taken again until all the orders are filled. That's when now this demand zone is exhausted, since all the pending orders at that level have been filled. And now they go to another zone, and that's basically how it works. Okay, so with that in mind, it's all about the balance of how supply and demand is. So it's basically, I'll put it as four given examples, right? So let's look at when the demand is high, when the demand of the price of the given price is high relative to the supply, that means the market will be pushed up, right? So let me get an annotation here. So let's say this is one price, this is another price, right? So at this point, when we say that demand is greater than supply, right? So if the demand is greater than the supply, it will cause the price to go up, right? Then it gets to this supply zone. At this supply zone, the supply will be greater than the demand, right? So if the supply is greater than the demand, what happens is the price goes back down, right? But then what if the demand is equal to the supply? Sorry, man, I'm left-handed and the mouse is right-handed, so it's kind of hard to scribble some notes with the whole thing. So what happens when the demand is equal to the supply? It will cause the market to range, okay? The market ends up ranging. So that's why you'll see the market ranging. Then if there is a zone, once the demand gets more than the supply, it starts rallying up. And if the supply is greater than the demand at that point, now it dips, okay? So I don't know whether that made sense. Of course it did. So I'll give you a moment to understand whatever I've explained here. Then I'll go on to the next point, which is now number 2. Okay, now we'll go on to the second. So distinguishing between supply and demand and support and resistance. So for that, I'll go back to my trading view, and I'll be able to show you the supply and demand and the support and resistance. So where it is. So I'll clear everything, just a moment. So, sorry. I should actually hide them instead. So when you see people talking about support and resistance, so one major thing that distinguishes support and resistance from supply and demand is that support and resistance is drawn using multiple touches. Like now I'll draw this line here. I don't know whether it's visible. Let me change the color. Let me change the color to something like black. Okay. So you'll notice that support zones, like you see, there's looking for the arrow. What the fuck? Yes. So you'll see where there are multiple touches, you see, that's one. There's another one here. And there's another one. There's obviously all these touches here. So that's how you distinguish between, like now this will be a resistance zone, and I would draw the support zone around here, okay? Because there were touches here, here as well, and here, okay? So now this, you notice that the market, the prices touched this zone, and touched this zone. So you can't, and you can also see that it's touched this zone. So this was like a resistance, then it broke the resistance, and now it became a support. So you'll notice that these are price levels where the price reacts by either bouncing off or bouncing out, like, I don't know, rejecting this zone or like bouncing through this zone. So that is the difference between like support and resistance. Also, support and resistance we've also described supply and demand as points where institutions place their trades. So that is also a difference that you can say is the difference between supply and demand and support and resistance is the criteria that we use in drawing the zones as well. So now I'll clear all of this. I'll clear all of this just a minute. Just a minute. This is my first video, so don't mind me. Don't mind me like losing words in the middle of the conversation or like something like that. It's kind of like scary or something like that. I don't want to say scary. So now we'll go to the third. We'll go to the third topic, and the third subtopic, and that was how to plot zones, how to know the strength of the zones. Now there's like where major chunk of the video will come into the number 3 and number 4. Sorry. So number 3 is how to plot the zones, and then number 4 is trading the supply and demand. Okay. So let's hop on to the drawing of the supply and demand zones. So back here. So you'll notice that we are talking about drawing of the zones. So drawing of the zones is basically identifying the points in the market where the institutions are placing their trades. So we use four basic market structures to determine how supply zones are. So there's a rally, base, rally. There's a rally, base, drop. Then there's a drop, base, drop, and there's a drop, base, rally. Okay. So in the rally base rally and in the rally base drop, we're looking for in the rally base rally, we're looking for demand zones, and the same applies for drop base rally. We're looking for demand zones. And for these ones, however, we're looking for supply zones. Okay, supply zones. So like right now, we'll come to the chart and look for the various zones. So like now for this one, we'll see this is a rally, base rally, right? Because this is the start. This is where the market started. The long rally. Okay, then it took a base here before it continued with the rally. So this is one. So we'll use this as the fast zone. And now since we've said that we use rally base rally for the demand zones, so we'll use this as the demand zone. Then now we're looking for, now you see price rejected this point and then it went down. So, and then it went down, there was a fast base here, and there was the second base before it finally got its base, its final price. The price like sort of like slowed down in this area. So we'll use this as a drop base drop. Then this is an example of a drop base rally, that because the price came down, then it went up. So that was like a reversal. And then now there's obviously the rally base drop. So let me clear the drawings now. So okay, fine. So we know all the market structures, and let me write them down. Let me write them down because they'll come in handy. So there's the continuation. So in the continuation patterns, there's a rally, and the drop base drop. Then we go to the, so that's one. Then we go to the second one, which is which are reversal patterns. And here we have the rally, base drop. And we have the drop is rally. Okay. So now I'll draw something here for you so that you guys can be able to notice how we draw zones. Okay. So we'll take it as a red as well. Okay. Yeah, red. Then we also have a green one to show for the supply zones. Sorry. Okay, so then we'll have some wicks. Sorry. Yo, fuck this, you know what I'm saying? Okay, fine. So this is how we're going to draw the zones now. Okay, so this is for drawing demand zones. Sorry, it's supposed to be here. This is supposed to be here. Okay, so this is for so we'll be looking for demand zones now. So with this now we'll start looking for zones that price can be able to react around that place. So we'll come and draw this zone here. We'll draw it to that. Change that color just a minute. Put it brown, gold, key. So is that zone? Because this was a rally-based rally, and that we look for supply zones as well. So there is this zone here. Fine. Okay. So we shall talk about a few things using this. We shall talk about let me put the arrows where they're supposed to be so that people can be able to see. So we shall talk about this. We shall talk about this. And we shall talk about this. Let me draw some minor zones here so that people can be able to see what I'm talking about. Fine. Okay. Nothing else. Okay, so we should talk about, okay, when trading supply and demand, we do either of two. either of two formats. That is, we trade the trend or we trade against the trend, or let's just say counter trending. Okay, fine. So these are the two ways that we can trade. We trade the trend or we trade the counter trend. Okay, so in trading the trend means that if the price is in an uptrend, we will look for. If the price is in an uptrend, we'll look to get in the pullbacks so that you can continue the uptrends, or the vice versa for the downtrends. We'll look for areas where the price is doing a liquidity push so it can be able to continue downwards. Okay, so in this example, for instance, we're looking for this was a rally, base rally, right? Or so I drew this zone because I said when the price comes back here, it's going to bounce off. Since this is we're going to be looking at it as a continuation of a bullish trend, even though you can see this is sort of like a bearish trend, but this is the 15-minute. But I hope you guys get what I'm saying. So this is a bullish trend. So when you're trading the trend, that means that once we're doing this bullish trend, we'll be hoping for a pullback. We'll be hoping for a pullback before the market actually goes back up. Okay, that's how we imagine trading the trend is. However, when you're trading the counter trend, what we really say is, let's say, let me zoom out a bit. We'll say that if the price is in bullish momentum, we'll say that once it gets to a specific zone, now like let's say it gets to, because you can see it's like there's a zone around here. Okay, there must be a zone around here. So we'll say that when the price is in bullish momentum, let's say in this example, it'll get to this point, and at this area, the price will reverse downwards. Okay, and if it's like for bearish momentum, once the price gets to a certain level, we say that the price will reverse at that point. So that's counter trending. Okay, so in this example now, we'll start with a I hope you guys have understood how we've drawn the zones. So now, like here, let's say here, we used this candle. I hope you guys can see the candle that I used. So we used this candle. We used the open to the topmost wick. And for this other one, we used the, let's look at this example. This is a good example. We used the candle to the lowest wick. Okay, so now that's basically how you draw the zones. So over here, after drawing the zones, now we come to, so now we've plotted the zones. Okay, now there's a point to note about strength of the zones. Okay, so in support and resistance, people actually mention that the strength of a zone depends on how many touches price has done on that zone. But now once we come to supply and demand, since we're talking about these are places where institutions place their trades, that means that for every touch on that zone, the zone weakens, right? Because more orders are being filled now. So for every touch in a zone, more orders are being filled. Like now, let me give this example, right? This example, this is a supply zone, right? So the price came, touched this zone. Price came, so that these are sell orders being filled. These are sell orders being filled once more over here. So now you'll notice that once we go to the area the third time, and third time is just for this example. It's not always about the third time. So once the price came to this zone here, you'll notice that the price broke away. And this is because the pending orders that the institutions had placed at this given price, they all got filled. That means that now the price will stop being at this zone, and now it will go on to the next zone. And now you see, once it got to the next zone, the orders, these orders here, you see, these orders were filled, but not all of them were filled. So once we go to this point again, some more orders got filled. And now once we get to this zone now, you can see that now it's like all the orders are being filled, and that it's going to break away. And now once it breaks away, it will go on to the next supply zone. I don't know whether that makes sense. Yes. So, so now that's the strength. So with every touch, the zone weakens. And that's why you'll find people trading only fresh zones. Because now if we were trading a fresh zone, we'd say that the moment this price touches this place, and then it shows us a confirm that the price is reversing, we'll take a sell. Like now, let's give an example of where the price actually touched the zone. Now it is supply zone, so we got this zone, right? So we'd come, then we'd see that the price has tapped this supply zone, right? After the tap in the supply zone, you'll see that it got rejected with this candle. So ordinarily, we'd take the trade at this point. That will be our entry point. Of course, it would have made the pullback, but now you see, it would have been part of our risk reward ratio. Like now, let me put the risk reward thing. I don't know where I'll find it. The fuck. Fine, here it is. So this would have been how the trade would be, somewhere around here, okay? Because this is like a minor demand zone, so we'll place the trade take profit slightly above, and then stop loss will be here, just a few pips above the supply zone. So that will be the trade. That will be the trade, really. So you see that we waited for the top of the zone and the rejection. And then after the rejection, we got in at the price. Now you see, of course, there's a bit of drawdown, but now you see it didn't hit the stop loss. It actually went in the money, and now we got the money. I don't know whether that makes sense. So that is basically it. That's how we'll take the trade. And that is basically like the whole story about strength of the zones. So then the higher the number of touches on the zone, the weaker it becomes. So a fresh zones are the strongest zones actually. And yeah. So and fresh zones are basically zones that haven't been tested before. So like this before all this was a fresh zone. And you see, once it got tested, price left the zone very fast. And it's the same thing for here. Price got in fast, it left fast. So that means that was a fresh zone. But now after that, it's no longer a fresh zone, and so we'll now disregard this zone. We'll disregard this zone, and then now like if I was to take the trade after this trade, I will disregard this zone. And I'll actually disregard it. There you go. So since it's formed this new zone here, now I'll delete this. Since it's formed this new zone in the whole process of dropping from this zone, it formed this new zone, right? And now this will be the zone we consider, because we won't consider this zone because it has been tested already, and so it's not fresh. And so we'll come to this zone now. And when we come to this zone, you'll see that price actually didn't test the previous zone, it actually tested this zone here. And now you'll see tested there, sorry, tested this zone again until it finally broke out. And you see, there's one thing I want to point out. It'll work the same as the way support and resistance works. When you break out of a zone, supply or demand zone, there is most definitely going to be a retest. And that's why you see, once it gets to the next zone, it'll retest on the previous zone, before continuing back to that zone. And that's what you see here. And I have a few examples as well for all that, but I'll give them at the end of the video for you guys to see, like previous trades or previous observations that I've made about all this. So that is it about strength of zones. So now this is all about now trading supply and demand. And this is with regards to swings and scalping. And it's basically the same, okay? It's basically the same, like the way I'd scalp, the same way that I'd scalp is the same way that I'd do the whole swinging. And I'll give you an example. Like swinging most of the time is taken on the 4 hour, right? So I'll clear everything. I don't know. Just give me a minute. Just give me a minute. Yeah, okay. Yo, what the fuck? Okay. Let's just disregard the zones for once. I'll just show you, like, if I was scalping the same GJ, I'd first of all come draw the zones, First of all, come draw the zones. Come here, draw the zones. Do the same thing over and over again. I'd actually do the same thing over and over again and just come draw the zones. Same thing for the supply zone. Okay, this one sort of like was broken, so I wouldn't consider it. So I do the same thing, and then now you see the risk and reward. The risk and reward actually, these are long positions. So if I was taking a trade here, I would wait for the price to come to this zone, and then the stop loss will actually be here. So that will be my risk to reward. Okay. So I'd actually wait for the price to come, reject the zone, then form a bullish candle, and then I go up. Then the price would go up. And you see, definitely went up. You see, although this one didn't actually get to the zone itself, but I know you guys get the memo. And it will be the same thing when it got here. Okay. So when the price got to this level, okay. Lock it. Okay. So the price got to this zone. Okay. Let me just move it a bit. The price got to this zone. And you see, all we're waiting for is a bullish close above the zone. So the entry will be here. This will be the entry point. And then we take the trade onto the next supply zone. So I'd take the trade until this zone. Okay. And you see, just as it happened, once it closed above, it went up. And you can see I'd let one position ride with the momentum, and voila, that would have been the trade itself. And with minimal risk, you can see this is a risk reward ratio of like 6.71. That is like really, really good risk reward, because a risk reward ratio upwards of like 1:1 is good. So that's basically how I would use it in scalping and also in swing trading. So I don't know how many pips. it is, by the way. I don't know. No, it doesn't show it, so it's okay. So fuck. This thing is actually harder than I thought. I thought this would be an easy task actually. But anyway, fuck that. So before I actually talk about limitations one can encounter while trading zones, I'll mention like three ways, I think, three ways that we can use to draw zones. Okay, so I think I have some screenshots. So first of all, there's gaps. Okay, these gaps. I don't know if I have it. No, it's not there. Add some screenshots. Okay, fine. Here's one. You can actually use gaps to draw your zones. There's an example of the USD on the daily, and I don't know why it's so. You can see this. This was a gap caused by the market. This was another gap caused by the market. So I draw them as demand zones, and you can see I drew this one as a demand zone. And once there was a bullish close, I took the trade upwards. Okay. Sorry, I took the trade up, and the trend went up. So over here, I didn't expect the price to get to this zone. You know, ordinarily I would have drawn the zone using this candle here, but I didn't because I saw this gap, and I was like, no, this is a gap in itself. And so once the price gets to this zone, it'll definitely go up. Once it shows you confirm that, and my confirm is just a candle close. So if it's a demand zone, I'll wait for a candle close above the zone, and if it's a supply zone, I'll wait for a candle close below the zone. Okay, so I'll clear everything. So that's the second way. So the first one is using the candles on the continuation patterns. Then the second one is actually drawing using the gaps, and the third one is based on like drawing what you call sideways movement, the sideways movement of the whole market. Like if it's consolidating, we'd use, like, let's say this zone. We'd say this is a zone, the zone in itself, and that's like what Forex 6 God calls the box and chill. Okay, let me show you an example of the box and chill. And also, okay, right before I show you guys the box and chill, I'll show you like respected zones. I took a couple of screenshots to show you like how zones should be respected, the candle close and all that stuff. Okay. So this is an example of a respected zone. So you'll see, okay, this was a zone I had drawn on the USD card. And you can see the price rejected, the supply zone there, rejected here as well. Okay, it didn't get to the zone over here, so you will have used this candle here to actually draw the zone, because now you see the price actually rejected the zone. Then there was also this supply zone I drew, and it got rejected once, twice, thrice. You see, before it was actually broken here. And the same thing is over here for the demand zone. The demand zone got touched once, twice, isn't it? So that's basically it. So this is respecting zones. These are respected zones. Then we'll go on to another chart. Let me see. This is also the GBP JPY. GBP JPY, there was also respecting zones. Demand zone touched once, rejected, touched twice, rejected, and went up. So now like here, this is a supply zone that I've drawn over here. So I'd anticipate the price to either come, bounce, and if it closes above, I'd anticipate the price to come above until we hit to this new supply zone. So the price would be rejected like that, unless it closes above. So that's basically it. I'm actually really shocked that it will be this hard to explain. So this is another example on GJ. This is another example on GJ. So you can see this was a supply zone I had drawn over here, and then the price. Okay, no, this is the anticipated. What I expected the trade to get to this supply zone. So I drew this supply zone, I think, on the lower time frame. So it came, touched the first time, touched the second time, rejected. But then now you see on this rejection, it's like the price actually went up because all the orders were filled. And so if all the orders were filled, this positive candle close will mean this market will move up to this top, and then come back down. And that's exactly what happened. And that's an example you also see here. Touched, rejected, touched, rejected, touched, sort of like rejected, and then now it went down. But now since we are trading fresh zones, we wouldn't take this third trade, because we'd be like, no, there's not a fresh zone and all that stuff, and it's not a fresh zone, so we wouldn't take it as a fresh zone, blah blah blah. Man, I'm thirsty, man. The fuck. The last one, okay, that one was on the PDF I posted. See, everything live, everything live. All the niggas who gonna be hating and all that stuff. So then I had that one, and then I also had boxing chill. These are also some. Okay, so I had a few problems with consolidations, because I'm not as good in consolidations as people put it as. So like this is ordinarily how you draw your zones, your box and chill. So I drew my box and chill here. You can see price consolidating. So I'll anticipate a break on the upside or the downside. That's basically how people trade. Okay, now this right here was a really bad trade. Okay, let me show you. Okay, so I anticipated a break. I think this was the day I took the trade. Yeah, this was the consolidation I drew, and so I was like, since the price is rejecting, is breaking out of the box, I was like, I'll take buy trades. Okay, and so I didn't take into consideration this resistance. I don't know whether you guys see it. This supply zone as well. This supply zone. So I was like, so dumb, because I took the buy trades here instead of waiting on the retest, because I was afraid like I'll lose the trades. I'll the fear of missing out. So I took the buy trades here, and as you can see, let me look for the screen. I ended up stacking the trades. Let me see if it can show. I took the trades here, and you can see this is a zone in itself. This is a zone, yet I took you never take buys at a supply zone unless it has broken the zone. And so I took the buys here, and then the price rejected it immediately. So it was like, I was so mad at myself. And these are just like 30 pips, 3 pips, 4 pips, and I was already down $100. And this is a live account, by the way. I don't know. This is a live account. So the price ended up like, so this was actually a fake out. This is a fake out, and then the price actually came back to this demand, if I remember well. Anyway, I closed the trades when the price got to like this place. I ended up losing like, I don't know, $200 or something. I don't recall it well. Yeah. So that's basically it. Nothing else about box and chill. So then we go to break and retests. I think I've talked about this already. A broken supply and demand zone. A broken supply becomes a demand zone, and a broken demand zone becomes a supply zone. There's an example. This is a supply zone I had. So once the zone was broken, it became a demand zone. So the buy orders were taken over here, and it went up. And that's the same thing for this UJ trade. This this demand zone, price came down, tested, went up, tested, went up. When all the orders were filled, broke, then came back to retest it, and now sell orders a big place now. So market price went down. Same thing for this. Broke the demand zone, became a supply zone. And yes, same as this one. You can see it was a supply zone, but then it broke. And now once it broke, it came back to test as a demand zone. And actually the demand zone held because of, you can see by here, the price came back, rejected the place. Yeah. So that's basically it. I don't know whether there's anything else. Fake outs. I think I've talked about fake outs. Oh, no. I've not talked about fake outs as well. Fake outs is something like this. Okay. This is something I actually came to notice. Take a look at this here. Here, this is actually what I want. So this is a supply zone, right? This is a supply zone. So we term this as a fresh zone. And so you see, I don't know, I can't zoom in, but this is a fresh zone, right? So the price is rejected the supply zones at this point. This gap was like this gap was a supply zone, rejected, orders got filled, broke out, blah, blah, blah. Then now we got to this point. So as a supply and demand trader, I'd look for candle close below the zone. This will mean to me that the market is going down, but I wouldn't take this trade because you see the candle didn't close below. It closed in the zone, of course, but it didn't close below. So I'd wait for the next candle to close below the zone. And since you see the candle close wasn't below the zone, it was above the zone. So I'd take it to the next. This is something I noticed. Majority of the people can say the rejection of the zone is just a bearish candle or a bullish candle, not necessarily in the zone. It might be outside the zone. I don't know. No, but that's bullshit. So the candle close must be outside the zone that you draw. I have a few more examples. Let me show you. The fuck. Here's another one. Here's another one. You can see this would have shown a rejection because you could see even this long wick shows like a rejection. But then once the price came here, it actually went. It didn't close below. If it closed below, then it did that. That would have been like some sort of like bullshit and stuff. But now you see it closed inside the zone. So you wait for the candle to close outside the zone. If it doesn't close outside the zone, then you see it closed on the other side. And then now you'd obviously take your buy trades on the retest, maybe on the retest, because the supply zone has turned into a demand zone. And now you can see that it actually turned into a demand zone over here and buys are being taken. Yeah. So that's basically it. I won't cover this right now because I have to take my brother to the mall right now. I don't want to take him. It's for a movie and I don't want to take him like too late because he might miss the movie. So I'll cover this in the next video that I'll post, and I'll post it together with Sprax. So thank you for watching the video. I know it might have taken a lot of time, but I hope you've been able to understand one or two things from the video. So do leave a comment in the description what you might want me to cover next time. And also, if you liked the video, give it a thumbs up and also subscribe. So thanks.